What's your view on the ecotasaciones, the sort of Bank of Spain, Spanish valuations versus the UK RICS valuations? We've seen a lot of situations where banks have kept things on the eco sort of Bank of Spain valuation and kept assets vacant, because if they let it at a discounted rent, it would bring down the value, whereas keeping it vacant, there's no market comp of a new rent at such low levels, so you artificially inflate values, which obviously isn't the right value for that asset. So what's your view? I mean, is eco fundamentally wrong? Should it be changed, or should people ignore it, or what's your view on that?
Yeah, Mary?
Okay. I have been valuer for many years, okay? A valuation is a valuation, okay? Wherever it happens. And the mathematics behind the valuation are the same. The only difference between a RICS valuation and a RICS valuer, but I have also worked for sociedades de tasación, that are the ones to do those eco-valuation, is the why you are doing this valuation, okay? According to the Spanish law, if you are going to get your mortgage in a Spanish bank, or you are going to use that valuation for an insurance company books or another couple of ways of doing, not ways of doing the valuation, but why you are doing that valuations, you should use the eco valuation. But at the end of the day, there is nothing new in an eco valuation that is not in a RICS valuations. You have to discount your cash flow, and you have to do it well. The difference between, let's say, international valuer and sociedad de tasación is that the sociedad de tasación has a lot of experience valuating retail in Spain, okay? They have been doing 300,000 valuations per year of residential units. But they have very little experience regarding commercial valuations. Why? Because they don't have agency. So they don't know how to evaluate a shopping centers, because they don't know basically the fundamentals of a shopping center. So the only thing is that if you are evaluating a commercial real estate asset, you should use, my advice is use a valuation company that have experience in international markets as CBR or Knight Frank or Jones Lang. If you are evaluating residential, you can use also these kind of companies, but also the sociedades de tasación. So it's not any difference between the way the valuation is done. It's just if you are using your valuation, for example, for an international bank, then you will ask you for a RICS valuer signed valuation, and if you are doing that for La Caixa by law, they have to use an eco valuation. Yeah. But if the valuation is properly done, it's the same.
I agree with that, but just the fact is that most of the real estate in Spain is held by Spanish banks, so most of them will have valued via the ecotasación, and that's sort of creating this standstill where the banks are unable to adjust their regards to the real value, because they look at their piece of paper that says this is my value, and it's difficult to adjust.
The issue with that, Mario, is that they use these valuations, as Mario was explaining as well, for securitization of mortgages. So they cannot happily adjust that because it's paper that they have sold. So it's not something that they control 100% themselves. So for them it's difficult to adjust that, because that would mean that for all the investors who bought that paper, they would have to give an explanation. So it's a standstill situation where no one asks, no one moves it.
And on top of that, it's their responsibility to do a stable valuation, okay? It's not possible for eco valuation to just be at the very hot spot at the moment of the market, saying that the prices goes up 15% today and 15% tomorrow, okay? They are based in a lot of data. They are very well done, honestly. They are very well done because they have managed thousands of transactions in real estate. They have a lot of experience. They have very good knowledge of the urban planning, and they are very well done, okay? Having said that, they are based in transactions of the last 6 months. So there's always going to be a delay in when the market is going down, because you are using data of 6 months older, but when the market is going up, also you are using 6 months data older. So it's always not, it's the same question that has been asked before. Something is a valuation, a different thing is the price of an asset in a certain moment for a certain buyer and for a certain seller. It's not the same.
I also think the major issue on the valuations is they work on benchmarking institutional investor appetite then through weaker and weaker real estate. So they just apply a discount rate on an assumed institutional purchaser, rather than actually analysing the profile of the type of purchaser that is looking at non-primary real estate and their cost of capital. Now that cost of capital is higher. It's in a market that is starved of debt. So again, in order for it to work efficiently and achieve the target return it needs to, it's going to have a far more exaggerated downward impact on pricing. And until the institutions move out of the very narrow space in which they're currently operating, you're going to keep on coming across that disconnect between valuation and price.